Where are we? Yes. See, just now we have covered non-current assets held for sale. Okay, non-current assets held for sale. Fine. This is it. Now coming back to this, what happens? See, the rules are, criteria is there. They have communicated to all the affected parties. Is it intended to sell? Is it intended to sell? Intended to sell. Okay. Communicated to all the parties. Is it communicated? Is it at next 12 months? These are the criteria. Okay. Next 12 months. And they are aggressively marketing. Okay. They are marketing, looking for the people who can buy the things. These are the conditions. Okay. If these are the conditions which are going to be taken into consideration if it is held for sale. Okay. If it is held for sale. Now, keeping that into consideration. Okay. Identify by selecting relevant box in the table whether the following statements are required or not required. Is right? Not required. If an operation is to be classified as a discontinued operation as per IFRS, non-current held for sale, the operation represents a separate major line of business or geographical area. The operation represents a separate major line of business or geographical area. It is required or it is not required?
Not required.
Pardon?
Not required.
See, when you are having a discontinued operations, you have different lines of businesses. Is that you have different lines? These are all IFRS. This is the criteria. Okay, this is the criteria of IFRS 5. Now, when you are talking about the things, you are selling some unit. When you are selling some unit, you are selling one division. Is it right? You are selling one division. What they are saying, whether the required, if an operation is to be classified as a discontinued operation, when you are going to classify as a discontinued operation, it should be a separate line of business. Is it? It should be. You cannot say that I am doing business and in that business you have to close down one business completely. Is it? One business, separate line of business completely. The operation represents a separate major line or job. You are closing down your business in Dubai. You are closing down your business in Kuwait. You are separate line of business. Is it right? So this is required.
Yes, required.
Okay, this is required. When you are understanding one question, you should understand with reason. Okay. The operation is a subsidiary company. Is it? It's not like that. See, it should not be like that. Is it right? See, you are talking about this business. You have another subsidiary. You have another subsidiary. Is that there is no condition that it is a subsidiary. It is a separate unit. When you are talking about the separate unit didn't constitute a subsidiary. Subsidiary is a part of the group. Okay, subsidiary is a part of the group. It is not required. Understand? Any doubt anywhere, you just question me. Is that the operation has been sold or is held for sale? Is it either it has been sold or it is held for sale in next 12 months? Is it? This is the condition. Is it? Means when you are saying it is held for sale it has to be sold in the next 12
12
months.
month.
Is it right?
Yeah.
Required, not required?
Required.
Required. The operation is considered not be capable of making future profit period of following a period of losses. See, when you are talking about future losses, fine, if you are you have to close down, you have to take, see that conditions are there. You have to take the decision, you have to communicate the decision, you have to take for the next month, and you have to make sure that you have to market the product. That's your intention to sell. Is it right? I didn't got now. Your intention to sell, that has to be there. Now what happened? The operation is considered not to be capable. You are saying that it is not, maybe some losses are there, but have you taken a decision here? Is it a decision or it is a assumption? First tell me.
Decision.
The operation is considered not to be capable of making. It is a decision or assumption?
Decision.
It is a assumption.
Why, doctor, assumption?
We are thinking that this will not make future profits. Is it? This will not. We have losses. Company is in losses. We are considered planning, thinking. Is it right? Considered means it is one of the criteria for assumption. We are assuming that it will not make future profits after making losses. We are estimating, we are making assumptions, we are thinking. Is it right? We are thinking. This is not a criteria of a discontinued operations. Now, coming back to this, what is the criteria? First, now you understand. The criteria is the operation represents a separate major line of business and that the operation has been sold or it has to be held for sale. Okay?
Yeah.
These other things these are not relevant. Is it? Next. Slowly. The IFRS 5 held for sale prescribes recognition criteria of non-current assets for sale. For an asset or disposable group to be classified as a held for sale, the sale must be highly probable. Means when you have decided that you are going to sell, you have to sell it next 12 months. Which of the following must apply for the sale to be considered highly probable? Read one.
Yeah.
Read and tell me.
Uh, 2 and 3.
The asset must be marketed at a reasonable price.
Is
Is it right? Is it reasonable price? Management must be committed to a plan to sell the asset. Answer is what?
Yes, sir. Yeah. 2 and 3, no?
Good. Yes. Next.
Yeah.
What is the employee cost associated with the closure and sale of factory, which would be charged to profit and loss account? Either year net. Is it? Now, when you are talking about the employees, how many employees are there? How many employees are there? 250 employees. 250 employees. 50 will be retained. Okay.
Retained.
How many employees are not going to be retained? I will write here. Is it right? In the examination, you are not supposed to write. Don't waste time. Is it? For your explanation, I am writing. Okay. Total number of employees. How much are they? Total employees are 250. Retained how much? Retained will be 50. Okay. Retained. Now, how many they are going to lay off? They are going to lay off how much? 200. Is that they are going to lay off how much? 200. Now, is that they are laying now? They are laying. How much they are going to give to 200 employees? What is the amount they are planning to give? 50,000. Is it right? They are planning to how much? Incurring? No, sorry. They are planning to give how much? 5,000 each.
Each.
Is it? The cost is how much? 5,000 each. Means 200 employees. Is it right? 200 employees times 5,000. How much you will get? 0, 0, 0, 0, 0. It is there?
Yeah.
What is the answer?
Yeah.
Answer is?
Yeah, 1 million, no?
Fine. Now, if you do multiple choice, today we do only multiple choice questions. Tomorrow we will do section. Okay, we will plan it. Okay. What is the profit or loss on discontinued operations related to property, plant and equipment? Is it? Now, what is the carrying amount is there? Carrying amount is how much? Carrying amount is how much? See the things. 1 minute.
Yeah.
This is related to, see now I told you beginning. This is related to question number 22. Is it? This is related to question number 22. This is related to question number 23. Is that examination same pattern? Okay, you plan it, you will succeed. Khalas. Okay. Now question: how much is the carrying amount? Carrying amount is 2.2. Okay. Just you help me. Carrying amount is how much? 2.2. Selling cost is how much? Selling cost is 500. Cost to sell is how much? Cost to sell is how much? 50,000. Is it right? Cost to sell is 50,000. How much they are going to realize it? They are realizing it how much? 450,000.
450.
This is the real. This is minus value. Okay, this is plus value. Okay, what is the difference you will get?
175.
175. Answer is? What is the answer?
Answer is profit.
No, it is a loss, my dear.
Is a loss? 200.
Okay.
Because
it is a loss.
Sell it for 50. Okay. Yeah.
Okay.
Yes.
Are you understanding?
Yes.
It is not difficult. Trust me, it is not. We have done difficult part. Study text is the most difficult one. Examination is you have to understand plan. Now, is it in respect of lease and penalty? This is which question number? Question number 24. Okay. Question number 20.
Lease and
this is where this is question number 24. Okay. What it says, see the things. In respect of lease and penalties, okay? Now, what provision is required for the statement of in the 30th September? If there are penalty payments are there, is that what provision, how much you have to make? Just read that scenario. Penalty payments due to non-completion are estimated how much? Are estimated 200. 50% of the recovered from the insurers. Is it? You are going to recover how much? You are going to recover 50%. Now what is the value of the contract? See, the company
Value.
rented a machines factory short-term lease 3 months. The present value release payments is 1 million. The lessor is stated to accept 5850 if paid on 30th October as a full settlement. If you are going to pay as a full settlement, how much you have to pay? You have to pay 850. Is it right? Now, penalty due to non-completion are estimated 200. 50% is to be recovered from neutral insurers. Okay. This is question. Which question? Question number 21, 22, 23, 24.
4.
Okay, fine.
24.
Now, how much? See what they are asking in respect of lease and penalty. What provision is required? Okay, what provision is? They are saying that they may receive 50%. When they receive, that is different thing. Okay, when they receive, that will happen. Why we have to bother? It is a realization concept. Is it? It is a realization. Realization concept means you have to realization concept, or you can talk about accrual. Okay, when you will receive, you will think about that. Now, what is the price of the lease? The price of the lease is how much? The lessor has stated that they will accept 50. How much they will accept? How much? 850,000. Is it? They will how much they will accept? They will accept 850,000. 850,000. Now, if it is not done, okay, if it is not done, how much we have to pay penalty?
50.
200. Is it? How much you have to pay penalty? We have to pay penalty of 200. See, listen carefully. 50% is expected to be recovered. They are saying that now you have to pay, and it is expected. There is no condition, probability. Okay, there is no condition of that. It may receive 50%. Okay, it may receive, but we should not take that. What? How much is the penalty? Add penalty. Penalty is how much? 200,000. Total it comes to how much? 0, 5, 10.
Yeah.
Fine?
Yeah. So they haven't given story. If you paid, you will get this. If you not paid, you will not get this. Something like this.
Something like that. And whenever we are talking, what happened in future, we are not concerned about that. How much we have, they say, how much provision is going to, we have to create. We have to see, we have to make sure that it has to be how much we have to pay, that much you have to make provision. Provision is nothing but, is nothing but estimated amount.
Yeah. Okay.
Is it? Provision is nothing but estimated amount. Fine?
Yeah. Doctor, can you do question 23? I just want to write. Question 23. Okay.
This is related to the, this is related to the one, okay? This is not related to, this is related to the previous scenario only, okay? This is related to previous. Which of the, we will come to this, okay? This, I don't know how it has been mismatched. Which of the following meet the definition of a financial asset? Tell me.
Which of the following meet?
Financial asset. The first one is financial asset or liability?
Equity is financial.
Another entity. Another entity, it means you are making investment. If you are making an investment in other company, it is a financial asset. Okay? You are making investment in other company. It is a financial investment. Okay? A contract to exchange with another under conditions. If you are exchanging with favorable conditions, favorable, okay, if you are on a favorable conditions, if anything which are working on a favorable conditions, it is a financial asset. Anything which are working with a to exchange instruments another entity which are unfavorable, it is not a financial asset, it is a financial liability. Cash is a financial asset. Answer is
1, 2, and no. There you go. Which is 1, 2. 1, 2, and 4.
Pardon?
1, 2, and 4.
1, 2, and 4. Are you understanding?
Yes, that.
Okay.
I understand. Yeah.
Fine. Using the pull down approach. Okay. Now see, now we have to see the scenario. Okay. Scenario also, these questions is related to 26 to 30. Okay. Now, what they say, speculate. Company is preparing a financial statements, financial asset, shareholding, a long-term investment. Okay, long-term investment. Is it a long-term investment of 10,000 equity shares of another company? They have acquired when? 1st October, 350 each. Transaction cost is 1% on the purchase. On 30th September, the fair value is how much? 450. Fine, okay. Shareholding B. This is a long term, this is a short term. Okay. They have purchased equity shares 1st September 2.5. Transaction cost is there, purchase price. What is the fair value? 3. Where possible, speculates makes an irrevocable election for the irrevocable means once it has committed, it will not be changed. Okay, it will not mean they are saying that whatever the things have been given, that's fixed. There is no plus or minus. Fine, this is point number A. 1. The existing taxation is a deferred tax, IS 12. The existing debit balance of is how much? 2.4. The represents under provision. Debit balance will be under provision or over provision?
Debit.
Huh.
Debit over.
Fine. Okay, we'll come to that. Okay, we'll come to that. For the year, a provision of 28 million. Is that a provision of 28 million is required for income tax? The existing credit balance is how much? 2.5, and the provision required is how much? 4.4. Is that a provision required? We'll do this. Okay, one by one we'll do. Okay, next another thing is IFRS 15. Okay, IFRS 15. See what we are doing. We are talking in terms here. We are talking in terms of IFRS 9. Here we are talking about IS 12. Is it right? Here we are talking in terms of revenue. Sold one of its product 10 million as a part of a sale agreement. Committed to a ongoing servicing of the product 3 years. The sale of this service is included in selling price. If you remember, we have done this in our test your understanding question. Same one we have done. The estimated cost to speculate is servicing is how much? 600. Gross profit margin is 25%. Ignore discounting. Okay, ignore discounting. Fine, that's okay. Fine. We will go one by one. Using the pull down list, select the correct to be included in comprehensive income in respect of financial statements. In respect of financial statements. Now, how much is the shareholding A? See the things. Now you have to be very clear. It is a long-term investment. Is it right? If it is a long-term investment, it will be where we have to show where other comprehensive income. Are you remembering this?
No, doctor.
Any long-term investment, is it right? Any long-term investment, it has to be shown in OCI, other comprehensive income. Any short-term investment, it has to be shown in the profit and loss account. Is right? It has to be shown in the this is the basic rule. Okay, this is not held long term. Okay, not held for sale. Is it right? It is not held for sale. Is it right? It is going to be shown in the, this is the rule, blanket rule. Any short term investment, it has to be shown in the thing.
Perfect.
Now, what happened? See the things. Long term easy. See the things. It is how much you have a long term investment. Long term investment is 10,000. How many shares they have made it? Their long term investment in 10,000 of the equity shares of another company. How much is the value of the share? The value of the share is 350.
350.
Is it right? The value of the share is 350. Now, what happens? How much is the transaction cost? Transaction cost is how much? Transaction cost is 1%. You have to add transaction cost. Okay? Is it? You have to add transaction 1%. Is it? 1 plus R. Okay? 1 plus R. See, I will put the thing. Number of shares multiplied by acquired price. What is the purchase price? Purchase price, is it? Purchase price into 1 plus R. Is it right? 1 plus R. Now, how much is the purchase price? They have paid 1%, 1% transaction cost. Is it right? 10,000 shares. Okay, 10,000 shares in times 3.5 times 1.01. How much you will get?
We can add it all together, 4.5.
4.5, how you will add?
Because 1, no? 1 more, right? 1% more, right?
This is the cost, na? This is the cost. How first you should say cost. How much is the cost?
Okay.
First 10, tell me the cost.
Yeah, 10,000.
10,000 into 3.5 into 1.1.
1.01. 35350.
35350. Okay. Now, what is the fair value? 10,000 shares, okay, times what is the fair value? 4.5. Is it right?
Yeah.
Fair value is how much? 4.5. It comes to how much? 45,000. Is right? It comes to how much? 45,000.
45,000.
Now,
Yes.
what they are asking? What is the question? Read the question. What correct to be included in other comprehensive income? Understand point? Other comprehensive income. If it is in other comprehensive income, it is related to which type of investment?
Long term.
Long term investment.
Yeah.
Is it? How much is the fair value? Fair value is 45,000.
5,000. Yeah.
Cost is how much? Purchase cost is how much? Purchase
10,000.
cost is 35,000.
35. Yeah.
What is the difference?
$965.
9,650.
650.
Gain or loss?
Again.
Answer is are you clear about this?
Yes, Doctor. Yeah.
It looks, see, only thing what we have to understand is OCI. The moment it is OCI, it is a long-term investment. What they are saying? What now you can do on your own. What is the amount will be charged to statement of profit and loss account? Statement of profit and loss account is short-term investment. Are you clear about this now?
Yeah.
Is it?
Yes, Doctor.
In respect of what they are saying? In respect of taxation. Is it? See what is, so here is nothing is there. No, sorry. It is, this is not related to that.
Profit and loss.
It is not related to that. They are saying that what is the amount? It has to be in profit and loss account with respect to what? With respect to taxation. It is not investment.
Taxation.
Is it right? It is not investment. Fine. Now they say that, now read the taxation little bit. Okay, read the taxation. What they are saying in the taxation is that the existing debit balance of the current tax account is how much? 2.4.
2.4.
Debit balance. Is it right? Represents the under our over provision. Fine. Next. A provision is required. How much is provision is required? 28,000. Is right? How much is provision is required? 28,000. 28 is required for income tax for the year ended. The existing credit balance is how much? The existing credit balance is 2.5 and the provision required at 30th September is how much? 4.4. Is it already there is a credit balance is there? Is it right? There is a credit balance is there. Fine. Now, how much they require provision? They require provision. Is it right? Provision on 30th September. 30th September 2003. How much they need? 4.4. Okay, 4.4 in 1000. If I put like this, 4.4. Okay. Now, how much they have? They have the credit balance. Is it? How much is the credit balance is there? They have a credit balance. Okay. How much is there? 2.5. Okay. How much is that? This is the This is the what they require. Okay, how much is the difference? Difference will be how much? Difference will be 1900. Okay, difference will be 1900. Now, what they are saying, the existing debit balance, is it the existing debit balance? See, this is the credit balance, is it right? This is the credit balance. Fine, this is the credit balance. Means the debit balance is how much? 1.9. How much is the existing debit balance? Means they still have to pay. Okay, they still have to pay how much? 2.4. Is that 2.4 existing debit balance? Is it how much they have? They have to pay 2.4. 2.4. Fine. Apart from that, see the thing. We have taken 2.4. We have taken 4.4. We have taken 2.5. How much is provision is required for the current year? They required a provision of how much?
2.8.
2.8. Okay, they required a provision of 2.8. Is it? If they required how much? A provision of 2.8. Add. Is it? Provision. How much required? 28,000. How much is the total?
$32.3. 32.
See the thing. I will
32,300.
try. I'll put like this. Okay. I will put debit and credit. Okay. How much is there? 2.4. Okay. 2.4. Fine. Okay. The existing debit balance is 2.4. Is it? And how much is provision is required? Provision is required of 28 million. Okay. Provision is required of the existing credit balance is how much? 2.5. This is the credit balance. Okay. This is the credit balance of 2.5. How much is the debit balance? 2.4. How much they are making a provision? Is that they want to make a provision of how much? 28 million. Is it? 28 million. They want to make a provision of 28 million, and how much they say that a provision is required? How much? A provision is required for 4.4 million. Was it right? A provision is required for 4. What they are asking? What is the question? Just go back to the question. What is the total amount to be charged to profit and loss account? Yes. For in respect of the taxation.
Taxation.
In respect of taxation. Fine.
Yeah.
How much is the total amount is there? Any doubt is there? Ask me. Is there? How much you will get this one?
3,300.
0, 3, 8 plus 2, 10, 11, 31, 300.
32,300.
32, 300.
300.
When you are making a provision, what is the entry you will make? When you are making a provision, what is the entry you will make? General entry. Debit, profit and loss account, credit,
what it called?
taxation.
Deferred?
Deferred tax.
No, not deferred. No, yeah.
Taxation.
Yeah, deferred tax. Yeah.
Okay. You have the fine. Already you see they have to make a provision of 4.4. Okay, they have to make a provision of 4.4. Okay, see right side. They have to make a provision of 4.4. Already how much is the credit balance? 2.5.
2.5.
Okay, 2.5. Net provision. This is the net provision.
Yes.
Is that there? Now existing debit balance is that still they have to pay. Okay, debit balance means they have till they have to pay. How much? 22.4 million. Okay.
Yeah.
Now and the provision is required for income tax for the year 22. How much still they required provision? They require see 1.9 they have to pay. Existing balance 2.4 they have to pay. And still they need a amount of how much? They still need a amount of 20. Total amount is how much? 32,300. Answer is
32,300.
which one?
32,300, right? Yeah.
Next one. What is the amount of deferred income in the statement with respect to contract and servicing of the products? Is it contract and servicing of the products? Now what this is with respect to IFRS 15. Is it? This is with respect to IFRS 15. Is it right? Now you have to should recognize in the financial position. Is it? When you are talking about should recognize in the financial position means see what amount of deferred income. Is it? What amount of deferred income. Now coming back to this, first you should understand what is the income. They are selling the one product for how much? 10 million. Okay. They are selling one product for 10 million. As part of the agreement, they are committed ongoing service of the product 3 years after the sale. See, 1 minute. The sale of this service has been included in the selling price of 10 million. The estimated cost to speculate is 600,000 per annum. Gross profit is how much? Gross profit is 25%. When the contract has been done 1st October 2002. Okay? One minute. It is 1st October 2002. Okay? 1st October 2002. When is the things it has been happening? As part of the sale agreement, committed on an ongoing service until 2005. Okay? Until when they have said 2005.
2005.
Until 2005. Which date? September? 30th September. Okay, 30th September 2005. Okay, now that is 3 years after the sale. Okay, so 2005 to 3, 4, 5. The sale value of this service has been included. How much is the selling price? 10 million. Is it right? Servicing is how much? See where is that? Sale is how much? Sale is 10 million. Okay, sale is 10 million. Okay, service cost is how much? Service cost is how much? Service cost
600.
10 million. Service cost is how much? Service cost is 600 million.
600, yeah.
Okay, now. Now, how much is that? How much is the gross profit they are asking. They are saying that gross
25.
profit is 70. How much?
Gross profit margin 25%.
20%. Okay. Gross profit margin is 25%. Now, which one we will see? They are talking about they are saying that, they say that now we have to take cost or we have to take service. Tell me first. Deferred income. Deferred income will be for what? It will be for the cost of the asset or for the service?
Service.
See the things. I will put like this. You will have more clarity here. Okay, you will have more clarity here. When they are purchasing this 1st October 2002. Is that 1st October 2002? Is it right? They are asking 1st October 2002. We are here. Where we are here? We are here in 30th September 2003. 1 year is completed. Is it right? Now, how many years are left? 2 years are left. Is it right? 2 years are left. Is it right? Till 30th September 2005. Are you clear about this?
Yes.
This is the deferred income. Is it? This is the deferred income. Now, when you are talking about the deferred income, okay? When you are talking about the deferred, they say that how much is the deferred income? Deferred income is 600,000. Is it? Deferred income is how much? 600,000. Any idea how we have to do?
Oh, yeah. We have to calculate as per the period.
We have to calculate as per the period. Only we have to take the service cost. Okay, we have to take only the service
1 year
cost.
only.
No, we should not take. Is it right? We should not take the thing.
Yeah.
Now, next, every year how much they are saying? It is going to be how much? 600,000. Okay, 600,000.
Yeah.
We are calculating here. Keep it in mind. Okay, we are calculating here. 600,000. Okay, 600,000 times how many years are there? Next 2 years. Okay, next 2 years. Fine. Now, how much they are saying? Gross profit is how much? Gross profit is how much?
25%.
Huh? Gross profit is how much?
25%.
25%. Means total sale value will be how much? Now, first you put like this, okay? How much is there? 600 in 600 times 2 years. It comes to how much? 1.2. Are you clear about this?
Yeah, 1.2.
Okay, 1.2. Fine. 25% is the gross profit. Okay, 25% is the gross profit. Means this is the cost. Is it right? This is the cost. If cost of 120 is how much? It is equal to how much? Equal to how much? They say 25% is the gross profit. Is it right? They say 25% is the gross profit. Fine. If they say 25% is the gross profit, is it right? They say 25% is the gross profit. Fine. You can sales minus cost of sales is your gross profit. Is right? Now, what will be the cost? What will be the cost? Sales will be 100. Sales will be 100. Is that? Sales will be 100. Cost will be how much? Cost will be 75. Gross profit will be how much? 25. Are you clear about this?
Again, doctor.
They say gross profit is 25%. Is it right? They say gross profit is how much? 25%. Always sales will be 100%. Okay, always sales will be 100%. We don't know cost. Cost is going to be X. Is it? Cost is going to be X. 100 minus 25. Cost will be how much?
75.
If cost 125 is equal to how much? 75%.
75,
Is it right? Then sale value is question mark. Is it? Sale means sale is your income now. Sale is the income. Is it right? Sale is the income. Fine. This is nothing but deferred income. Are you clear about this?
Yeah.
Is it? How much is there? How much it will come? It will come how much? Then sale of 100% is how much? Sale of 100% is question mark. Fine. Sale of 100% is question mark. 100 by 75. 1 minute. Just I will redraft it. Okay.
Yeah.
If 75% of cost is equal to, if 75% of the cost is equal to 1.2, then 100% of sale, I can write, I'm writing deferred income.
Yeah.
Is it? Deferred income is question mark. 100 divided by 75 into 1.2. How much you'll get?
One five. No, that's 15999.
1 point.
No, 1599999.
Round it off.
It's still long. 15. No. One. Oh yeah. 100 and then 75. 1.
How
Yes.
much?
Yes, correct. 16. Yeah, 16.
What is the answer?
Yeah. Oh. 1.6.
Is it simple one? Now I will put in a shortcut, okay? 600 times 2 years. Is it right? 600 times 2 years, 100 by 75. That's all. Okay? Now, are you clear about this?
Yes, sir.
Which two of the following are true in respect of the income which speculate has deferred at 2003? Is that deferred income?
Yeah.
What is the deferred income? If you remember something, is it right? If you remember something, is that deferred income? Is it right? Deferred income or deferred expenses. Okay, deferred income or deferred expenses. Now you read first options, then you tell me. Take time, 2 minutes. Tell me.
Hmm.
Which two? They are asking us what? Which two?
Yeah. The deferred income. The first one is correct.
The deferred income will be split evenly between current assets and non-current assets. Next 2 years, na? Next 2 years. If it is for next 2 years, they will okay. Next, good.
Yeah. I'm not sure the second one. It seems like okay.
Go to the third one.
Third one, the deferred income can only be. And the third one, no. Mostly 2, 1 and 2. Mostly 2, 2 other than others.
The third one is the deferred income can only be recognized as revenue when there is nothing like there's no condition of a signed return contract. Okay, deferred revenue is not that you should a return. They don't need any signed return contract. Okay.
Yes. Yeah.
When recognizing the revenue service contract, the stage of completion is not irrelevant. It is relevant. Is it right? Relevant. You have the obligation. What is what we are talking in terms of IFRS? IFRS 15. IFRS 15 talks about 5 steps. Is that 5 steps? What are the 5 steps? You have a contract, you have an obligation, you should have a price, you should have an allocation, and you should have a recognition. Understand?
Yeah.
Is that? I am writing again. Yeah. Contract, you have an obligation, you have a price, you should have allocation, and you have a recognition.
Yeah. Recognition.
Take my word, on these fundamentals they will ask you questions.
Yeah.
Okay. Now, what is the thing? Means this is also not true. The first
1 to
and
2.
second.
1, 2.
Okay.
Yeah. Okay, doctor.
Fine. Now, we check which we have not done. We have done 21 to 30. Okay. We have done 19. This we have done. Now we have missed 1 or 2 questions. Now where are those questions?
I think part B we have not done from beginning. Like 16, 17, 18.
Where is that? We have done 16. We have done 7.
We have done part A, alright, full. But part B we have not done. This one 16, 17 and 18.
16. Value in use we have done now?
No, doctor, we have not done this. I think so. We'll check the last one.
No, we have not done. 1 minute. I will 1 minute. Here we have not done. Okay, 14. We have not done 14. Okay, 1 minute. We go from the beginning. Okay, we go from the beginning. We have done 1. Okay, where is that? We have done 1. 1 we have done. We have done 2. Parent is
No.
when a parent is evaluating the assets of a potential subsidiary, certain intangible is separate from goodwill. We have done this. This is with respect to IFRS 38. 5-year lease also we have done. Question number 3. Question number 4. Financial statements, transactions. We have done this. Question number 5. Only we have not touched the group company consolidation.
Because we said that time we still not taken it now.
We have not done the consolidation only. We have skipped. Is that we have done diluted? See, we have not done this. Okay, which we have not done. Question number 7. Okay, see the things. Are you clear about this? Okay. So question number 7. Now I will explain you this. Now you will understand very clearly. Okay. Question number 7. I will not going. I will just see what they say. Fork 80% and spoon is how much? 20%. Okay. What they are asking? What is the profit on disposal will be recorded in the for the things. Is it? Now, how much is the sale proceeds? How much they have sold it? They have sold it for 5,000. Sale proceeds. How much they have sold it? They have sold it for 540. Now, in that sale proceeds, they have said the cost of investment is how much? 3,750. Okay, cost of investment 3,720. Now, immediately before the disposal, the consolidated include the following. Carrying amount the asset is how much? Carrying amount of the goodwill is how much? 1674. Is it? Carrying amount is how much? 1674. And no, carrying amount the goodwill is how much? Excluding goodwill. Okay. Carrying amount excluding goodwill is how much? Carrying amount is excluding goodwill is 4464. Next, how much is the goodwill? They have calculated here already. Is that they have given us goodwill on acquisition is how much? 1674. Okay. Next, carrying amount of NCI is how much? 900. Okay. Carrying amount of NCI how much? Sale proceeds. Is that sale proceeds is 5580. Is that 5580 minus carrying amount of the assets, goodwill minus NCI. How much you will get? You will get 342. This is the profit they are earning. Is it right? Are you clear about this? That we didn't have during that time. We didn't have this concept of the parent company and subsidiary company. That is why we are not in a position to accept it. Is it right? Now, consolidated. Is it right? Consolidated finance are presented on the basis of companies within a group are treated as a single entity, a single economic entity. Which two of the following requirements of preparing consolidated financial statements? All subsidiary must, there is nothing like must adopt. See, every company will have different accounting policies. Is it right? See, accounting policy is nothing but depreciation. You will use straight line method, I will use return on value method. Okay, there is nothing like must. Okay, there is nothing like must. That is why we should not. Subsidiaries with activities are substantial different to the activities. Should not be considered. Again here the sense should not be. I told you, it is no hard and fast rule. Is it right? You are having in Samsung is there, electronics is there, construction is there, lifts are there. Is that? All entities should within the group should be normally prepared in the same accounting period, in the one reporting period. Okay, they should not be different. Unrealized profits within the group must be eliminated. We have eliminated now, and which it is not sold. If it is not sold, on that amount we have to deduct the profit. Okay, those we have done. If you remember rightly, portion of unrealized profit. Okay, we have done. Is right? That portion of unrealized profit should be eliminated. Purchase we have done, you remember, we have done from the sales we have deducted and from the purchases we have deducted. Is it? Intercompany sales. Is it? From the purchases we have deducted and and any unrealized profit we have added back. You remember that? We have added back any unrealized profits. We are eliminating. Okay, adding back is nothing but we are eliminating. Are you clear about these two?
Yes, doctor.
These two only we have not done. Is it right? Other things. See now you take this one also. Here we have stopped. Okay, we will do this. Is it right? Dashing group sells 60 go dashing group sell goods to its 80% owned subsidiary. How much? Own subsidiary. Subsidiary dancer. Is it right? Dashing sell group sell to its own subsidiary. This is the dashing. This is the dancer. Is it? 80%. Okay. During the some of the goods will remain in inventory. Some are unsold. Okay. Some are unsold. Using the drag and drop option, select the correct adjustment required for the consolidated state to eliminate any unrealized profit. Eliminate unrealized profit. Eliminate unrealized profit. You have to be clear about the nominal account rule. Is that nominal account? What it says, debit. Is it right? Expenses and losses. Credit. Is it right? Credit income and gain. If you want to eliminate profits, we should what we have to do? We have to make it debit. Okay, make it debit. Debit. Here what we are doing? We are having retained earnings, inventory and NCI. If you are talking about the gain, okay, unrealized profit, it is nothing but here in this scenario, gain is nothing but retained earnings. Is right? What we'll do? Debit will be retained earnings. Is it right? Debit will be retained. It has not been sold. Okay, it has not been sold. It is the inventory. Is it right? It is the inventory, not sold. Inventory in an asset. Is that inventory is an asset? Asset always. Is that asset always? Assets always be a debit balance.
Yeah.
Is it? Now, if you want to eliminate an asset, what you have to do? We have to do the credit. What we are going to do credit? We will do the credit with respect to what?
Investment.
Inventory. Understand the things, okay? Rules, if you have these rules, 90% our task is over. Fine?
Yeah, doctor.
Is it? Now, see the things. We have done this? No, we have not done this. Okay, we have not done this. We have done the others. Yeah? No. Caddy acquired 240,800 equity shares. Is that how much is there? 240 divided by 800. It comes to how much? It comes to 30%. Is it? It comes to how much? 30%. Okay? 30%. Fine? Now, how much they have paid? How much? See, I will put like this. Okay? Now, how much is the cost? See, is it a Amble profit for the year 2005 was how much? 400. Is that 400 into 30%? Okay, 400 into 30%. Is it? On the assumption of associate, what would be a carrying amount? See what they say? They say that it has paid an equity dividend. When they have paid equity dividend? 20th September.
2005.
Okay, 20th September. Put the dates here. Okay, put the dates. When they have acquired on 1st of October. Is it 1/10/2004? Is it 1/10? Their profit for the year is 30th September. Okay, 30th September 2005. Okay. They have paid dividends when? They have paid dividends on 20th September. Okay, 20th September 2005. Is that we have done? If you remember the last problem we have done on that date, means we have removed the dividends, if you remember rightly. Is it right? We have to remove that because these dividends have been paid after acquisition. Is it? These dividends have paid. Dividends paid. Okay? Dividends paid after acquisition. Now, okay, what they are asking us, what would be the carrying amount of investment? What is the investment amount? Okay? How much is the cost? Cost is 240,000 times how much? $6. Okay, 240,000 times $6. How much it will come?
$144,000.
144,000. They have profits, is it right? On the profits also they will get profit for the year ended. How much is there? 400. Share in profits.
400.
Is it? Share in profits. How much is there? 400 times 30%. Is it right? 400 times 30%. Why 30%? They are acquired 30%. Okay, they have acquired how much? 30%. How much will get? They will get 120.
120, yeah.
Minus. After acquisition, there will not be any, they will be share in profits, but they will not have share in dividends. Okay, when you have acquired it, you will have share in profits. You will not have share in dividends. Okay, less dividends. Is it less dividends? How much dividends? 150,000. Is it 150,000 times 30%? It comes to how much? 45,000. What is the total?
1515.
How much?
1,000.
One-
15,000.
Answer is
3. Number 3.
okay. Once it is over, I will send you this file. Okay, tomorrow
Yeah,
when you are
please,
free,
doctor.
are you free
Yeah.
tomorrow morning?
Morning, no, doctor. We are working.
Why,
Evening.
you have not taken any leave?
No, doctor. I taken Thursday leave.
Only
And I
on
was doing
examination
this,
day?
Yeah.
Okay, tomorrow na, when you will be free?
Mm.
After office, when you will finish your office?
After, yeah, same like this time. We will
Same
be
like
free.
this time, inshallah.
So you have class at this
Same
time?
like this time, okay?
You have
Le-
class or something?
No.
Okay,
Tomorrow is audit exam, na, people are busy.
Oh, okay. All right, then same time, no?
No, inshallah. Is that
Okay.
question number 11, question number 12, question number 13, question number 14 we have done? No. Question number 14 we have not done. What they say, pyramid acquired 80%. Is that this is, now you will understand. See, pyramid is there. They acquired how much? 80% of square. Is it right? Of square, 20% of 9 million. At the date of acquisition, they have, Square has a plant which has fair value of 3 million. Is it right? They have a plant, fair value is how much? 3 million. Is it in excess of the carrying amount? Date of acquisition, how many years are there? 5 years. When they have acquired, then when we have acquired, see the thing. Now you will understand, okay? When they have acquired, they are acquired on 1st of October 2004. Is it 1st of October 2000? How much remaining life is there? 5 years. They have to policy to value NCI at fair value. For this purpose, Square shares have been how much? 3.5 in the year end. Okay. How much they have reported profit? 8 million. Is it right? How much is that? We are talking about non-controlling interest. What is the amount NCI? Is it right? NCI in Square we valued in the group company. Okay. Now group company. We have to take fair value. Okay. We have to take the fair value. Fair value of shares. Is it how many shares are there? 9 million. Okay, 9 million shares times, what is the fair value? Fair value is how much? 3.5. Sorry, we have to write like this. Is that how much is there? First you have to take 20%. Okay, 20%.
20%. Yeah.
Okay, times.
From
okay, times 3.5. How much you will get?
the 630,000.
How much?
630,000. 20% into 3.50.
Oh, fine, no problem. How much?
Yeah.
630,000.
Yeah. 630,000.
630,000. Now, how much? See, they have profits are how much? They say that fine.
Profit.
Okay. They have the fair value. We are not talking about all the things. They have the what is the amount should be included for NCI. What is the share of profit? How much is the profit is there?
8 million.
Is it? Now, see, listen carefully. Okay. You have a profit of how much? Post-acquisition profits. Is it? Post-acquisition profits. How much is the post-acquisition profits? 8 million. In this...
Into 20, right?
Huh? Sabar.
In,
Wait. Okay, 8 million. In this 8 million, they say that we have to deduct depreciation. Depreciation on fair value of plant. Is it right? Depreciation on the fair value of plant. What is the value of the fair value? 3 million. Okay, 3 million divided by how many years? 5 years. You will get, is that, times how much you have to, is that, how much you will get? Tell me. It comes to how much? 600. How much you will get? 600,000.
600, yeah.
Okay. How much is the post acquisition profit? 7.4. Is it right? How much is the post acquisition profit, sir? In this 7.4, how much we will take? We will take 20%. How much we will get? 1,480.
Yeah, 1,480.
Total is how much? 8, 7,
7. 778,000. Yeah.
Is it okay?
Yeah, doctor. Yeah.
Fine.
Fine, doctor. Yeah.
Now, we have done this 16.
You have done
16 to 20. We have done 20.
And A, B, completely we done it.
A, B, we have done completely.
Yeah. All right. So we will take tomorrow C.
Inshallah. See, if you have time, we can sit for 1 hour also after dinner.